In the first quarter, mining activity grew by a massive 21.3%. Manufacturing also increased by a strong 4.5%. Economists say that's evidence of good economic growth overall, as mining and manufacturing account for a quarter of the country's economic output.
Manufacturing and mining are definitely positive. It's very likely that we're going to see a positive for the utility sector. We are probably going to see a positive for most of the trade sector.
But COVID-19 restrictions and the resumption of load shedding continue to put a damper on economic growth.
Some industries like air travel, hotels and leisure that won't be back for quite some time due to the COVID situation and the lockdown as such.
And that in turn hurts job creation. The country's unemployment rate rose to 32.6% in the first quarter, with over 7 million South Africans unemployed.
Unemployment is going to keep on rising in South Africa unless we grow more than 4.5% every year, and it's only going to start happening after people are more confident. I think there's still a confidence problem with the pandemic and the lockdowns. People are still not sure if we go back to, say, a level 3 or a level 4, and they are a bit nervous as such. And I think a lot of the smaller firms that are normally very nimble just haven't come back quite as quickly as one hoped. We are seeing positive signs, however. I think it'll still take another 6 months or so before some smaller firms are back either selling or manufacturing.
The economy is still expected to grow by around 4% this year, despite the impact of load shedding and ongoing fears about a third wave of COVID infections. Bongani Mungchwa, SABC News, Johannesburg.
The Reserve Bank has released the country's official gold and foreign exchange reserves. That's for the month of May. Gold reserves rose by $540 million to $7.7 billion, while foreign exchange reserves came in at $43.9 billion, down $103 million in April. The overall improved reserves position and international liquidity position are said to have been driven in large part by the increase in the US dollar gold price. Foreign exchange reserves are an important facility for a country in the event of currency devaluation crisis. In such a situation, they can serve as backup funds to aid a country pay its external liabilities.